standard e-commerce and mobile type stuff that you're used to seeing probably with companies like Stripe. But we can definitely do swipe transactions as well, a little bit different. So,
Great. My name is Rod. I'm the head of corporate development at Avant. Avant is an online personal loan marketplace. We've done just over $2 billion in issued loans so far. We're based in Chicago. We have a growing presence here in LA, and we're hiring aggressively. Some folks here in the audience with my shirt on that are looking for great talent. We also have a small presence in London as well.
Hi, Paisley is, as Janine said, an intelligent platform for automating savings and payments. We are in stealth mode, so I've got to keep some stuff, a little bit over here behind the veil. But our approach is, there's a lot of money apps out there predicting how much you can save, and there's a lot of automation out there in finance, like I would pay $50 a month or something like that. Paisley allows, pretty much we give you the keys and you can create your own way of doing that. So we put the power in the hands of, we put the trust in the hands of our users. So that's pretty exciting for me.
Great, thank you. Okay, so starting up open discussion here. So where are you and your fundraising efforts? I'd love to hear more about, the power of bootstrapping, how you went about raising capital, crowdfunding. So I'll leave it open.
I can tell you for us, we bought PayHub about a year ago to get into the integration market, and there was a lot of work to be done on that API, and so we've been self-funding all that out of our traditional transaction profits. But now we're to the point where we need to go out and we need to do a private equity round, and it's pretty tough, especially in payments. It's very competitive, and so trying to get the valuation we need without giving up, a big percentage of your equity, it's really hard to do. I've also got a startup that we bootstrapped as well, and that's been a much better experience in my opinion if you're starting out. Try to find a technical co-founder if you're the biz dev side and build it out with nothing if you can, and just wait as long as possible to get that first round of funding if you can.
So as for me, I came from a different angle. I sat on a lot of boards and committees that want financial literacy and savings tools. And there wasn't anything out there. And every time I was at a committee meeting and they would be like, well, we should have this, or let's try out this foundation. And a lot of the publishers had paper or disc or send you a floppy disk, or currently in schools they have these time key ebooks, but nothing, or a calculator that says, oh, put in your numbers, but nothing actual real-time, your own bank account situation. So that push and nudge for me from my committee was like, I needed the support, and they gave me the support. I bootstrapped it, tried to find engineers, CTOs. It was very difficult, so I said, I'm going to do this by myself. And along the way, I found more people, did a lot of events, started networking, and finally found someone that was comparable to equally me and more. But I had more on the consumer side. I understand the federal mandate laws, compliances. There's a lot that's going to happen soon, and a lot of other financial institutions knew about it but didn't have time. So just partnering up with them was the way I bootstrapped mine.
Just real quick, so I have a story on the fintech side. Previous to joining Avant, I had a company that was co-founder and CEO of a Y Combinator company in fintech called Ready for Zero. And one of the biggest challenges we had, which forced us actually to get into fundraising mode, was the cost of data. So I think there's kind of two big things when you're starting a fintech company. You need some access to data. And, companies like Yodlee provide some of that data, and it's not inexpensive. So that was one big challenge that forced us to raise about $250,000 to kind of get started. The other thing that we needed access to data in and around the credit data. So we had a partnership with TransUnion at the time where we needed to pay for data. So that's one of the challenges. The second one is in and around compliance. So as you know, federal compliance and regulations affect fintech companies, as well as the compliance around that. So like regularly making sure that you're compliant with those rules. So the legal fees was another reason that we had to raise that small amount to kind of kickstart our business.
I can go keep this real quick, yeah, we're actually in Bootstrap. We're in the trenches, I guess, and it's really hard. But what the approach I've been taking is kind of intermittent pitches to test the waters. I'm going out all the while, full intention to bootstrap all the way. My universe is the money in the bank. I negotiate a lot of things that are deferred, and so I'm working with what I've got, and from very early, just my practices. I have about a dozen relationships with VCs, at least as many with angels that are there helping, and so every time I check in with them, they're able to see the progress I'm making, and there'll be a point that's natural as we have our product out the door and some data that people can extrapolate to say this is a great thing or not, then investment will happen. But I think that a little hybrid approach is what I'm taking.
So with the legal and compliance issues that exists in the fintech sector, do you feel as though you need more money to start at the very beginning? Like, is it important to get VC funding at the very early stages as opposed to social network startup?
I think I can attest to that. Being in that sector already, having that expertise is valuable, and also knowing the compliance and securities, I had to do that on my own. Having the legal officers and having that connection, or submit a request and proposals or a review on that is very important. It's not just SEC rulings, you got to look at FDIC, you have to look at other liability aspects of fintech that can make it or break it later down the road. And that is essential when you're looking for legal assistance, law firms. Do they get it? Do they get what you're trying to do? What is the feature that you want to do? And is that viably authorized to do it now? Or is it has problems right now? Or is it going to be in the legislation 2 years down the road? So knowing these factors and in a timely manner does make your planning stages a huge element of your production. And with that in mind, having other variables like other kinds of data, US Census data, getting those requests, who gets those requests, how do you get your clearances? There's major steps and hurdles, but if you understand them and ask the right questions, they're there to help you and they will open the doors. But the number one thing is finding someone in legal that understands what you're doing.
Yeah, it's we just recently went through a MasterCard audit and a PCI audit all within the same month. So we have a team of about 6 people that just dealt with that specifically. So, if you think about if you're a startup, then you've got to have somebody that's fully focused on everything that goes into that. Because we deal with just credit card payments, right? So there's a lot of FDIC stuff that we don't have to mess with. But being PCI level 1 certified and having MasterCard come in to make sure that all the accounts are signed, you're doing the right due diligence. You're not letting fraud in. You're not, letting aggregated accounts in and things like that. And it's a full-time job, so you got to be ready to have this staff to handle that.
I agree. I mean, PCI is.
It's 3.0 now,
No kidding. I think we spent maybe $75K on getting PCI kickstarted. So it's just to get it going. But I think, it depends on the business. So to go back to your question, Avant, we're a personal lender, so we're very capital intensive. So we need capital so that we can lend. In addition to all the regulatory and compliance stuff that we need to deal with, that capital needs to be constantly replenished. So in our case, we've actually raised almost $1 billion. So our last raise was $325 million round, which we announced maybe 2 months ago. But without that capital, our business doesn't function, so it's very capital intensive. So it depends on the business.
Dang. I can speak for myself, but I'm not using payment cards, so yeah, the PCI. I think there's my approach is the stair-step approach. Again, I'm in the bootstrap zone, so I'm reducing my footprint of all the tools I'm using. In the beginning, it's just ACH for me, and I'm just watching. So there's they can't use a credit card or a debit card. They can hook up their bank, and I'm using great partners. So that's one of the beautiful things about the moment that we're in is there are great tools that you can walk right into, and somebody else is dealing with the compliance on that stuff. So yeah, we've got to protect our customers' data, and there's all the standard work we have to do with making sure that we're within compliance on that. But there are solutions. If you're a small company and you want to get in, there are solutions where you can diminish your regulatory liability significantly. To get some traction, and then you can expand beyond that.
Ron, you mentioned before you came out of you had a startup in the Y Combinator. Do you feel as though just being part of that, having that exposure to VCs and stuff, just having that on your resume, working at Apple, working at Google, increases your success of getting funding?
100%. I always describe Y Combinator as kind of like a slingshot. So it helped us skip a lot of steps because immediately there's like a stamp of credibility, and especially in the fintech sector, I think it helps a lot. The more credible you are in that space, the more partners you can attract, and the more kind of deferrals you can get from partners potentially. So absolutely.
So do you think that, out of all the sectors out there, outside of fintech, health tech, everything like that, fintech, there's more pressure to have those credentials and that strong resume in order to get funded?
Yeah, as much as you can. I mean, we Ready for Zero later went on to raise money from Citibank. So we raised about $4.5 million after Y Combinator, after a quarter million seed round. So without that stamp, there was no way those guys would have even taken those meetings, especially because at that time, actually, I didn't have much of a background in fintech, and so I was co-founder and CEO, and without that income from PayPal, or had that fintech experience that a lot of the companies we were kind of competing with at the time did. So without that stamp of approval, we wouldn't have been able to possibly even get those meetings. So that's
Now, also about crowdfunding, you have Indiegogo, colleagues of mine, Scully, they were able to raise $2.5 million within a period of 48 hours. You have Kickstarter, and now we have equity crowdfunding coming into place. Do you think that's more effective? Do you think it's more effective than going through a VC, whether you experienced crowdfunding for your own startup or not?
I would say it probably depends on your long-term outlook of where you want to go. I only know a lot about the VCs and the private equity guys in Dallas, but they want to see you kind of go at it on your own, maybe with a small seed round through private individuals first, and then they want to come in after the fact. If you come in with a big crowdfunding, a lot of those guys just kind of they shy away from some of those types of early rounds in the Dallas area.
I think crowdfunding, especially if you do it from unaccredited investors, which if you do it with unaccredited investors, you've got a whole can of worms with disclosures and stuff, which I don't know all the details of. But if you do go that route, then you raise money and establish traction at the same time. So you kind of get your POC, your proof of concept right then and there, with some money in the bank. So that's great. Doesn't work for me because I'm in stealth mode again. So if I do that and show everybody my awesome stuff, then somebody with a lot bigger bank account could just come in and try to zap me out of existence. So.
Well, as for us, we do strategic partnerships. We also like to look at investors who actually know the space, because it's really difficult to re-educate or educate someone how important this compliance is and how all of these regulatory things are. And if they just want, get the product out, let's see how it does, then you're open for exposure, you're open for a huge liability, and you might crash and burn. Instead of that, to explain to an investor or VC or even their law firms, it's very intensive. Sometimes they get it, sometimes they don't. So knowing that if they get it or they want to be a part of you, they have to understand that these are important pieces to make you successful and sustainable in the future.
So another question. So of course Silicon Valley, they get all the hype, all these startups come to Silicon Valley for funding. Is that true? In order to get funding, do you need to be in Silicon Valley? And Avant, I know you're based in Chicago, and Corey, I know you're based in Texas and LA. Love to hear your perspective on that.
Well, in my startup, Tucker, my technical co-founder's in San Francisco, and he, the money that those guys get for just having an idea is crazy. In Dallas, I mean, it's such a traditional oil and gas and telecom market that they judge you real hard off your financials. And so if you're a startup, obviously you have no financials, right? So you're going to have a lot more traction to probably get a much lower seed round or a Series A if you need that out of Dallas than you will out of the Bay Area. And you're probably going to have to give up a bigger piece of your valuation too, because they're not going to give you the crazy valuation on top of that money.
Yeah, I think so. We spent the last 5 years. I just recently moved back down to LA. I grew up in Orange County, but I spent most of my time in Silicon Valley. And as you mentioned, I was right out of high school in Silicon Valley, actually, at the very beginning of the dot-com boom. So I think one other flip side to that is it's true. Some people with just an idea can raise a lot of capital in Silicon Valley. But the other side that benefits entrepreneurs, I think, is that they understand the ideas sometimes better than other investors. So sometimes I've been to investor meetings that are non-Silicon Valley investors. I'm not saying that's just a generalization, but the technical depth that some of those guys have in understanding what you're doing and what's possible and what's not possible, because they've seen all these different companies, I think is a unique thing to Silicon Valley.
I just decided right now I'm moving to Silicon Valley. At least getting the phone number. Down here, man, investors really making me work for it. It's cool. It's just the climate. So, down here, I confer with other entrepreneurs, and it seems to be the case. I mean, I hear about somewhere, a little bit. If you're closer to the water, you can pitch an idea, and on a prayer you can raise some money. But the message I keep getting is show me something scientific. I want to see points on a map, users, who's paying, something in the vicinity of a trajectory that they can base their decision on. In fintech, actually, it's because it's kind of frothy and there's a lot of options out there, even more so.
Well, if you take a look at where all the fintech hubs are, it's in the U.S. It's New York, Wall Street, and especially Atlanta. There's a little bit in D.C. and there's London, Dublin, and all across Europe. So there's a lot of people who are looking at you just because you are in fintech, just because you are anywhere in the world. It's great now. A lot of them are really traditional, conservative, really money-minded, and so you have to make, like he said, everyone here said, gotta make a product that is worthwhile, and it's compliance-driven. On my platform, it has to be military-grade. It has to be already compliance 3.0, which was mandatory last month. There is also EMV that we're behind on. There's so much liability for merchants, transactions, payment gateways. All these stuff is a huge amount of information for you to assess. And to have investors, VCs, law firms, whoever is on the table has to know that these are all a global issue, and that you understand that, so that your user base is not generally domestically, it's internationally. And if you can scale up internationally and beyond, that's fabulous. So that's how we're looking into the future.
That's really interesting. In Silicon Valley, it's really hard with our customers. I'll introduce them to VCs and stuff in Silicon Valley, and it's just, of course, their product's going to be good, but they're using our API, so of course it's good. But it's just really interesting to see how easy it is. Like I only see the other side, right? Where I make the intro, you got a great product, get some funding, but it's like you never really see behind the scenes. You hear these stories of, oh my goodness, raised $2 billion or some crazy valuation and all this other stuff, but you never really see the true story, what's really required in order to get to that space. So a finishing question, since I only have 1 minute and 58 seconds left, do you feel as though we're in a fintech bubble?
Not yet. It's a long ways to go. A lot of work.
Yeah, I would agree. And now with a lot of the major banks like UBS, Barclays, and Citi's getting into the blockchain stuff, and we're just getting into the early stages of that game.
Yeah, NASDAQ is not with blockchain.
They say cash is always in style, so I think fintech has a long ways to go still, especially there's a lot of real businesses being built in fintech.
A lot of people think, we all talk about users, think of them as people, serve people, make a great product for individuals. Don't worry about that stuff. Valuation will, if you make a great product that people love and it serves them, you're going to get a good valuation.
So any final words for aspiring fintech startups in LA?
If you have a passion, go with it. Find good people with core, ethical, and have honest integrity and see your vision and be on the same page.
I would say build a B2B platform and use PayHub for your guests.
I guess keep pushing. I think fintech has a lot of obstacles. We talked about the regulatory compliance, the capital requirements, but we got to just keep pushing to get past those obstacles.
Talk to a lot of people who know what they're talking about. LinkedIn has been an amazing resource. Use it. Search for exactly what you're looking for, and just ask in a very sincere and personal way, will you help me? And I've gotten so much invaluable information and help in that way.
That's great. Well, any questions from the audience? Going once? We got 5 seconds left. Come on. Anyone? Oh, I'm over actually.
It's increasing.
Okay. Well, thank you very much.
All right, everyone, that was it for Tech Week. Basically the future of fintech. See you at the next LA FinTech event.